The terrestrial grid is completely tapped out. The technology sector knows this intimately. That is exactly why mega-cap companies have publicly committed to spending well over $300 billion on AI infrastructure in 2025 alone. They are desperately trying to build out physical power capacity before the terrestrial grid locks up entirely. This dynamic has triggered the ultimate geopolitical capital allocation race. The United States has aggressively deployed over $227 billion in venture and private equity capital directly into artificial intelligence infrastructure. They are desperately working to maintain a strict technological and economic edge. In direct response, China has directed $138 billion toward building out their own parallel, sovereign digital ecosystem. State-backed initiatives and elite private equity firms are fueling the early stages of this global arms race. But the ultimate liquidity provider, keeping this trillion-dollar machine running, isn't a Silicon Valley venture capitalist. It is the everyday, middle-class retail investor. When a conglomerate like SpaceX realizes that harvesting continuous solar energy in low Earth orbit is the only physically viable path to powering a 1.96 gigawatt data center, they require a level of liquid capital that private markets can no longer provide. They need the massive liquidity of the public markets. But modern public equity markets are no longer driven by individual stock pickers analyzing quarterly balance sheets. They are completely dominated by massive, automated passive fund inflows. The heavy concentration of mega-cap tech stocks has effectively broken traditional price discovery. This constantly forces underlying index valuations upward, regardless of the individual fundamental health of the companies involved.